Good morning, all traders and serious students of the market. Today is January 20th, 2021. The time is just short of 11 a.m. Eastern Standard Time. This is Jeff Kilian for the Vector Traders Consortium, vtctraders.com. We'd like to go back to the basics here this morning. We've had a lot of requests come through to take a good look at what is really the foundational process, in this case, of the correct application of trend lines. So that's exactly what we're going to do. We'll keep it short and sweet. Run time will be about 5 minutes, maybe even less. And let's run through some of the core things that we need to remember, never to forget. So using an indicator program here, we're looking at ES near contract month 321. Let's get right to it here. When the market turned back around here at this time after last year's major sell-off, okay, so now we're looking at an opportunity to be able to see how the market's going to trade up and where we might have an opportunity after that happens in order to go short. So let's do this. Let's look at a base formation here, or in this case, a pivot point low, and look for the correct connect point, which is this bar here, and then draw it up to the next connect point, which in this case could be here, then here, then here, and look for the possibilities of a trendline violation to the downside on a closing basis. Let's connect here and move it up. This was the first connect point right here that was available. Okay, broadcast that out into the future until you get a violation. Next connect point was right here at this juncture, and then simply moved over to here at this juncture and broadcast it out into the future, the hard right edge. Now, we don't necessarily know exactly when these trend lines will get violated, but we do know that we have it in place and we're waiting for the market to come to us instead of chasing the market. Okay, so here's our point of origin. Technically speaking, connect point number 1, let's firm it up so we make it exactly right. Okay, and this, in this case, right here is the lower right-hand side of this up close. Okay, because it was the lowest open or close. And the lowest open or close, no matter the combination, where prices got violated here. Now, what one would want to do at this juncture here is look for the indicator formations, especially smart money trackers like money flow, long and both in short and long term, excuse me, to be able to determine what were the probabilities of this trendline violation following through. Okay, so let's move into the future here and readjust the trend line to where we are affixed here, and so forth and so on as we get broadcasted out into the future, both here and looking for that violation, which essentially happens here. Okay, not here, but here. And then finally, the last connect point before we have a nice correction to the downside on increased volume, mind you, right here. So connect point number 1. Okay, here, 2, 3, 4. So 4 different areas, but the point of origin always stays the same. The violation here at this juncture, we called on a previous YouTube uploaded video at around this time before the market actually sold off, that we believed that there was a high probability that the market would have a nice short-term correction to the downside, and it did. So the trendline violation, in essence, at this particular price and time, this intersection of price and time, was clearly the icing on the cake that said, that's it. And this happened in real time, obviously, and on an end-of-day basis, as the chart you're looking at right now clearly states, time to load up and go short. Every professional trader, every serious student of the market needs to know that the bulk of the money will always be made as the market turns around and quickly takes off in another direction. I mentioned earlier talking about some of the increased volume here at these particular points where we have major overbought territory on these prices trading through previous market highs here. This is the increased volume that came in. So you want to take a look at this too, and the violation to the downside here. So you have the confirmation on the volume. And real time, this came in on market opening throughout the day, and EOD volume was intense. I also mentioned earlier, looking at some of the indicators for the smart money trackers. So let's quickly take a look at the MFI, the money flow index, the 14-period look back, and see at this juncture exactly what this indicator had to say. And sure enough, this is the upside trend line application connected to the top side of the prices, which is the correct way to do this, not the downside. On the upside of the prices on an open or closing basis, a pivot point high, or base formation low or high, one or the other. And clearly, the highest level of the short-term money peaks out here, which is associated with this price point right here, and then a lower peak of money is established at this juncture on this particular day, right? Which was 9/2/2020. And then the market takes off to the downside. An official and established short-term negative divergence where the indicator is clearly eliciting a high probability market turning point. What is going on behind these prices is there is major pent-up selling pressure that has not taken place in the form of future directional price movement yet. There you have it. This is Jeff Kilian for the VTC, the VectorTradersConsortium.com. It's my pleasure to present to the world today and going back to the basics. For more information on what we offer, you can visit our website, take a look at our course material. For those of you who are serious students of the market, we do have mentorship programs available to you. Thank you for joining me today. Be careful out there.